Welcome to our video on funds versus accounts. Icon CMO has contribution funds, accounting funds, and accounts. It's extremely important to understand the difference between these. A contribution is defined as a gift or payment to a fund. This is the money members of your congregation donate throughout the year. Members specify if the money is designated to a particular cause, such as youth group, building renovations, or more. These causes are your contribution funds created under contributions, management, funds, and pledges. When entering contribution batches, these are listed under receiving funds and will show up on your members' contribution statements for tax purposes. Contribution funds are not part of the accounting and will not show up on the general ledger or accounting reports. Money recorded in the contribution module is only a record of what your members have donated. Money from other sources, such as grants, fees, fundraisers, or rentals, should be entered on the accounting side by either a journal entry or a bank deposit. Any reports needed for pledging or contributions can be run by going to Contributions, Management, Funds and Pledges, and clicking Reports at the bottom of the window. Next, we have accounting funds. Nonprofits and government agencies use fund accounting to emphasize accountability more than profitability. Accountability is extremely important to nonprofits because members donate for specific reasons, and the church needs to be able to accurately show reports on how the money was earned and spent. Think of accounting funds as pots of money within your organization. As members make donations to specific causes or contribution funds, this money is allocated to the appropriate accounting fund, meaning which accounting fund has permission to spend the money that is deposited into the asset account. To determine how many funds the church needs, ask yourself, do I need to know how much was earned, spent, and remains for blank? If the answer is yes, you will want to create an accounting fund. Accounting funds are a self-balancing set of accounts. This means you are able to pull reports and see exactly how much income you received, how much you spent, and what is left for that particular pot of money. To create a new accounting fund, go to General Ledger, Funds, Fund Maintenance, and choose Add New Fund from the dropdown. Type the name of the fund, determine if the fund is restricted or unrestricted, and click Save. Last, we have accounts. There are four main account types: assets, liabilities, revenues, and expenses. These four account types make up the chart of accounts. Asset accounts hold the money. These are your bank accounts, investment accounts, cash, equipment, or property that you own. Liability accounts show the debt owed. These are your loans, mortgages, credit cards, and payroll taxes. Revenue and expense accounts are the line items in your checkbook register. It's the description or story of how the money was earned and spent. Revenue accounts show how money was earned, and expense accounts show how money was spent. At the end of the year, you can pull a revenue and expense report to create a budget. At the beginning of each year, your revenue and expense accounts start at zero, so you always know how much was earned and spent in a given year. All of the accounts within the chart of accounts are utilized by all of the accounting funds, so it's best to keep these generic. Common mistakes that we see in the chart of accounts would be naming accounts as funds. Account names should not have the word fund in them. Funds and accounts are different. Another mistake is having sub-accounts on checking accounts. This is what your accounting funds are for. You can't reconcile a checkbook with sub-accounts. It's important in accounting to duplicate exactly what happened in real life. If there is one checkbook in real life, You should have one checkbook in icon. The accounting funds are your buckets within your checkbook, so you should not have to have sub-accounts. To create a new account, go to General Ledger, GL, Chart of Accounts. Click on Add New Account. Select the type of account, if it's a sub-account, enter a name, and click Save. There is a detailed video on the Chart of Accounts under the Help button on this window. Previously, we established that contribution funds only track your members' donations, and the accounting funds utilize the Chart of Accounts to produce the financial audit trail. Now we need to talk about how the two sides of the system communicate. There is an option in the system to link the two sides. This would mean that when you post a contribution batch, the system would automatically generate a journal entry in your general ledger. Under Organization, Preferences, Church Membership is a Link to Fund Accounting option. Change this to Yes and click Save if you want the system to be linked. When the link is turned on, you must have the contribution funds accounting link set up. Go to Contributions, Management, Funds and Pledges. Select a contribution fund and click on Accounting Link. These settings will tell the system how to make the journal entry on the accounting side. Select which accounting fund the money will go to, which bank account will hold the money, and which revenue account will track how the money was earned. Thanks for watching.